Hey there, Truster fans. Well, everybody's talking about the price of Bitcoin surging past 28,000 for the first time since June. The rally comes amid speculation the Federal Reserve could slow or even pause interest rate increases this week as contagion from the collapses of Silicon Valley Bank and Signature Bank continue to reverberate through the world. The largest cryptocurrency by market cap has been on a bit of a rally as of late, surging 38% over the last week and up 21% over the past month per TradingView data. The reason, in my view, is fairly obvious. The risk profile of uninsured deposits of cash is changing. They're no longer seen as the safe haven they once were. That's why Bitcoin bulls are back. For some reason, they disregard the inherent volatility of Bitcoin and see what happened with SVB and Signature and a bunch of others as a sign of a collapsing system. And while the system is collapsing, they see bailouts left and right, which puts them in this warped state of mind, this sort of a Schrodinger thinking that the libertarian paradise called Bitcoin is simultaneously a redeemer of the legacy system and its doom. To put it simply, apparently people no longer want to store value in the fiat system and are scooping up Bitcoin as if the evil zombie cannibal Putin is already at the gate. There are of course some less poetic factors at play here, namely the inability of BUSD holders to pass KYC at Paxos in order to dump their pseudo dollars. So they buy Bitcoin with them. Most Bitcoin trade happens at Binance, and that's where price discovery happens anyway. The Tether printer is also going nuts again. I suspect it's because BUSD is a zombie and pumpers gotta pump. So one thing is for sure, there isn't any evidence of fresh retail dollars coming in crypto, which means that Bitcoin remains a rather elitist asset, kind of like a grand piano in a living room. Or a Tesla. Still, unsurprisingly, the rally is a big hit on crypto Twitter, with one popular user claiming that if we see another bank bailout, Bitcoin will break 30,000. It seems like a legit financial advice. Anyway, let's see what else is going on. So the banking crisis is continuing to send jitters through global markets, but it seems no one told Bitcoin. I already mentioned the world's biggest cryptocurrency cracked 28.5 on Monday, which is today. Bitcoin has surged by 28% in the past week, outperforming major altcoins as its overall dominance rises. All of this comes as regulators grapple with the growing panic about the traditional financial sector. It's now been confirmed that Credit Suisse is being snapped up by UBS in a cut price deal that's designed to prevent further contagion. So by all measures, this rally is different. Bitcoin is seemingly for the first time working as a safe haven asset in response to the traditional banking system and in response to a globally unreliable and jerky central bank money policy. That's the prevailing opinion among Bitcoiners. As you know, I don't share it. The assets of the formerly crypto-friendly lender Signature Bank are set to be acquired by Flagstar Bank per an FDIC announcement. But there's a catch for crypto. The subsidiary of New York Community Bancorp's agreement to purchase deposits and certain loan portfolios belonging to the failed lender doesn't include the $4 billion worth of its crypto deposits. Quote, the FDIC will provide those deposits directly to customers whose accounts are associated with the digital banking business, end quote. That was the statement by the FDIC. With a challenging regulatory climate in the US, Coinbase is planning big changes. The exchange will reportedly set up a trading venue outside America. Right, yeah, it worked out so good for FTX, having a trading venue outside of America. Anyway, go broad, go deep strategy. We'll see it launch new products and services in markets of 6 continents. While Coinbase is already operating in more than 100 countries, all of those subsidiaries funnel clients to the same US trading platform. The new platform would focus on, quote, high-bar regulatory jurisdictions, Coinbase said. That would include the UK, Singapore, yeah, that's a high-bar jurisdiction, all right, and the EU. Brazil, the UAE, Australia, Hong Kong, Switzerland, Bermuda, and Japan are also shaping up to be potential targets. Crypto.com received its MVP preparatory license from Dubai's Virtual Assets Regulatory Authority, VARA. Once licensed to be operational, Crypto.com will be able to extend its approved suite of duly regulated virtual assets activities spanning a range of crypto exchange services, brokerage, margin leverage trading, and OTC offerings around settlements for institutional investors. Sam Bankman-Fried is seeking to use FTX's corporate insurance policies to cover his legal expenses, according to a court filing on March 15th. I know everybody's tired of this, but I think it's important for the crypto space, so I keep putting in those updates on the FTX thing. So as per filing, the policies provide priority of payment to insured individuals such as Bankman-Fried. The move would put the former CEO on top of the FTX payout list. Another headline shows that Bankman-Fried's Inner Circle received $3.2 billion in payments and loans from FTX-linked entities. The amounts include over $240 million used for the purchases of luxury properties in the Bahamas, political and charity donations, as well as substantial transfers to non-FTX subsidiaries. In another headline, FTX debtors reported $11.6 billion in claims and $4.8 billion in assets, meaning that there's a $6.8 billion hole in the exchange's balance sheet. It's a big hole. While it's still an eye-watering amount, it's a vast improvement on the $9.8 billion shortfall that was forecast at the beginning of March. So far, they have found $11.6 billion in claims against $4.8 billion in assets in the chaotic and incomplete books of the bankrupt firm. The ongoing fluctuation in the assets and liabilities of the FTX exchange and trading firm Alameda Research is a result of what restructuring expert and current CEO John Ray III called a complete absence of trustworthy financial information, end quote. FTX customers are owed $11.568 billion, and just the 50 biggest creditors are waiting to get $3.1 billion back. A trading app called iEarnBot Jesus, has cost thousands of would-be cryptocurrency investors everything and could be one of the largest crypto scandals to date, according to a report by BBC News. I don't know how large a scandal that is. Its investigation found that the company operates in a large number of countries, including Romania, Indonesia, Nigeria, and Colombia. Investors have been promised guaranteed high returns, but saw their balance crash to zero whenever they attempted to make a withdrawal. iEarnBot's website had a named CEO, but when that person was approached, he said he had never heard of the project. The Massachusetts Institute of Technology, MIT, Huawei, and Qualcomm were listed as strategic partners too, but they've denied having anything to do with the app and having any knowledge of it. Jesus Christ. People, be vigilant. The U.S. Federal Reserve will raise interest rates by 25 basis points on March 22nd, despite recent banking sector turmoil, according to a strong majority of economists polled by Reuters. This one goes back to the beginning of last week, but I feel it's important to mention that Circle's stablecoin USDC climbed back to its $1 peg, following positive developments concerning Circle's $3.3 billion worth of reserves held at Silicon Valley Bank and its new banking partners. The redemptions of USDC will now be processed by Cross River Bank and BNY Mellon. The stablecoin depegged from the US. Just a reminder, the stablecoin depegged from the US dollar on March 10th, following SVB's sudden collapse, triggering the depeg of many other stablecoins. Ethereum developers set a target date of April 12th for its long-awaited Shanghai hard fork during the all-core developers execution layer number 157 call on Thursday. The Shanghai upgrade, more accurately called Shapella, marks the completion of Ethereum's full transition to a proof-of-stake POS network and will enable staked ETH withdrawals. It's finally happening, people. Microsoft is reportedly working on integrating a crypto and non-fungible token-friendly Web3 wallet into its Edge web browser. In a March 17th Twitter thread, software documenter and occasional info leaker Albacore shared a series of Edge user interface screenshots showing the early stages of the firm's new Web3 wallet. Kudos, Microsoft, I wonder. Okay, I don't know. I think Edge is not the most popular browser among crypto developers, but hey, whatever. More power to you, Microsoft. The Euler Finance hacker sent back Ether valued at $5.4 million to lending protocol over the weekend, marking the latest development in what's dubbed the biggest decentralized finance exploit of 2023 so far. Last week, a malicious actor executed a flash loan attack on Euler, causing a $197 million loss and leaving a significant capital hole for the team. Euler had offered the attacker a 10% bounty, it's roughly $19.7 million, in exchange for returning the remaining 90% of the stolen funds in an on-chain message to the attacker. While the attacker has not returned the majority of the funds, they have moved a portion of the funds back to Euler. I don't know, I guess crime does pay. Somehow the hack has been linked to, who else? North Korean hackers, but I'm not going to dignify that in the response. Anyway, this is it for this week's newsreel. Thank you so much for watching. Again, a reminder that we put a lot of videos on TikTok. Those are short ones, and they basically just cramp a whole bunch of information into a 3-5 minute format. So if that's something you're looking for, kind of a shorter, more informative videos, please subscribe to our TikTok. We have plenty of infotainment there. So again, thank you so much for watching, and I will see you in the next video. Peace.